Hello, this is Mike Swanson of WallStreetWindow.com. Got a very special guest with me today. I'm speaking with Jordan Roy Byrne, who runs the website, thedailygold.com. How you doing today, Jordan?
Hey, Mike, I'm great. Thanks for having me.
Yeah, thanks for taking the time to talk to me and my listeners. Gold is something I've been involved with in the past couple years, and but I'm in a funny situation with it because I do have gold and silver as core positions and some mining stocks in my accounts as part of an overall portfolio. It's not all I own, but you know they're going sideways. They've been going sideways for a year and a half, and my people that follow what I'm doing don't even really care about it anymore. And now we've dipped below 1,300, and and I don't really have any idea when it's going to turn up and break out to new highs because my indicators such as the 200-day Bollinger Bands have flatlined for so long that their signals don't really mean much anymore. When people are asking me for gold predictions, I'm just like, I've got my core position. I'm not too worried. And so I'm going to turn to you, who's been studying a lot of the historical trends. And you just put out a post about what you think is going to happen in the short term with gold with the recent drop below 1,300.
Okay, yeah. First, let's touch on the short term, Mike. I think gold is setting up for a summer rally. And I think for that to happen, I mean, for me to be right, what I would like to see is gold to come down and test 1265 to 1270, and perhaps that happens in the next couple weeks. Perhaps that happens around the time the Fed hikes rates. We know a hike is basically priced in. We know that over the past 2 years we can go back and precious metals have rallied after the Fed has done each of these rate hikes. So that's something I'm looking for because there's a couple reasons. First of all, sentiment is encouraging now. If you look at the net speculative position in gold, I measure it as a percentage of open interest. It came down to 22.7% last week, and that's one of the lowest readings of the past 2 years. I mean, to be the lowest, it would have to go down, I think, below 15%. So comparing to the last 2 years, that's pretty encouraging. Assuming gold goes down to 1265, that position would probably go under 20%. Also, the daily sentiment index for gold, last week it did hit 10% bulls, but in looking at the 21-day average of that,
let me interrupt you, but I'm going to post this on YouTube in the About section. I'll put a link to your charts so people can see that.
Sure, yeah. So with the daily sentiment index, the 21-day average for gold, it's at 32% as of a couple days ago, and the low over the last 8 months is 30%. So assuming gold remains weak over the next several days to weeks, the 21-day average of the daily sentiment could hit an 8-month low. So we have sentiment that is encouraging if you're a bull because it's getting more negative. It's not an extreme yet. However, if we see gold come down to 1265 to 1270, you'd have even more bearish sentiment. And that level on the chart is where strong support is. If you're looking at a weekly chart, you can see that 1265 looks like lateral support going back a couple years. You can draw some various trend lines. Those come in around 1260, 1265. There's some long-term moving averages like the 400-day or the 600-day that come into play right around 1270. So basically a confluence of things is pointing to 1265 to 1270 as the next strong support. Sentiment is already bearish. It could get even more bearish, and factor in the fact that gold tends to rally after a rate hike. Probably going to get we will get a rate hike in June. So after that point, to me, Mike, I think you could see from the middle of June into July, gold has a chance to rally from 1265 to, I would think, minimum 1300, maybe 1310 or 1315. So that's the summer rally that I'm looking for.
Yeah, and like you said, it seems to be these things get timed with Fed meetings. That's kind of what happened in March. There was that Fed meeting and gold rallied right afterwards.
Yeah, absolutely. I mean, it's been very predictable. But however, the problem is gold has not it's not broken out. It's not made a higher high. And then as gold has basically been going sideways, as you said, the miners in silver have been trending sideways to lower. If you actually look at the Huey, which is basically, it's similar to GDX, but you've removed the royalty companies, which are much stronger. So when you look at the Huey, you're just looking at gold producers. I mean, that thing has been ugly. That thing hasn't gone sideways. It's gone lower as gold has gone sideways. Same thing with silver. So, with that said, it's predictable that we're going to get a rally in the summer, Mike, but I don't think it's going to turn into this massive rally and this big breakout that some bulls are predicting.
Well, let me ask you this then. What would it take, do you think, or what does gold need to have the big rally that would take it to, have the big breakout through 1360 or so and really take off? What's missing? What do we need to see happen?
Oh, great question, Mike. We basically need to see a rapid acceleration in inflation, or we need to see the Fed pause and move to cutting rates, because gold is driven by falling real rates or negative real rates. And actually over the last year, real rates have been rising. I mean, if you look at like the 5-year and the 2-year treasuries, those things have been screaming higher. So, long-term rates breaking out, I think eventually would be good for gold, but it's really short-term rates that are more correlated, I would say, to gold. And I mean, of course, it's real rates is the ultimate correlation. It's an inverse correlation. But the problem for gold is short-term yields have just been screaming higher. And so back to your question, we need to either see a rapid increase in inflation, or we need to see the Fed pause and stop this rate hiking cycle. Now, until several weeks ago, Mike, I was of the mind that it's going to be inflation. It's going to be a rapid increase in inflation. That's what's going to push gold to a breakout into a real bull market. However, I've changed my view on that, because I've looked at history. And I mean, this is very interesting, Mike. There's two things that are very interesting to me that I want to point out. Number one, I went back and looked at over the last 60 years how I was just curious, okay, how are gold stocks performing with regard to Fed cycles? And most of the time, not all the time, but most of the time, the best moves in gold stocks would bottom when the Fed finished hiking rates. Now, the only times that didn't happen were 1972, 1976. Those were highly inflationary times, so inflation was going up, spiraling out of control much faster than rates were going up. And then also, you had something in the mid-90s and then the 2016 bottom, where they bottomed when the Fed started hiking rates again. However, that did not last. Now, Mike, I think if you look at the 1999 to 2001 cycle and compare it to now, there are a number of similarities. First, that cycle began after a nasty bear market in commodities and gold. So we had the same thing this time around. Secondly, the Fed also, the mid to late 90s, they weren't hiking rates. They kind of paused for a while. And then in 1999, Mike, the Fed started a new rate hike cycle. So that happened again with the December 2015 hike. And what happened back then is the Fed started hiking rates. You had this sudden big move up in gold and gold stocks, and also commodities. Commodities trended higher. But as the Fed continued to hike rates, commodities continued to go higher as they're doing now, but precious metals did not. Remember, gold faded and it made a double bottom in 2001. The gold stocks made a lower low because they weren't quite as oversold a couple years before, as they are now. But anyway, what happened, Mike, is gold stocks bottomed in late 2000 ahead of gold. The bottom for precious metals in that cycle is when the Fed finished their rate hikes and they went to a pause and then to start cutting rates. So that's what they did. What happened when they did that was as the stock market was selling off, commodities are rolling over. However, when they did that, that's when precious metals bottomed. So everything is not, the 2016 to 2019 years look very similar to that 99 to 2001 period. Now, everything, history rhymes. It doesn't repeat exactly, but there are some strong similarities. And if we look, the Fed's been hiking rates. Gold has been unable to break out. But as I said, the gold stocks and silver, they've kind of been trending lower to sideways during that period. So to me, and Mike, I've always mentioned we need to see gold outperform the stock market for this breakout to happen. So I think at some point, Mike, what you're going to see is you're going to see issues in the economy, in the financial markets, whether it's because the dollar shoots up and this rally turns into a huge move higher. That's one reason. The rate hikes, they go above 2%, they get to 2.5%. By the end of this year, maybe early next year, these things are going to start to affect the economy, slow the economy. And then at that point, you could see perhaps a bear market start in the S&P. Then the Fed says, "Whoa, we gotta stop hiking rates, and we have to think about cutting them in the months ahead." I expect that will happen sometime next year, Mike, and that's the time I think when you'll see a real bull market in precious metals begin. And Mike, that inflation is going to be starting from a higher base, Mike. I think when we're looking at the next economic expansion, maybe in the 2020s, maybe it starts in 2020, I don't know. But I think in that cycle, Mike, that's when you're going to see inflation really accelerate, really take off like it did in the 70s. And I think that's when you see gold rallying back to, its old all-time high at $1,900 an ounce. So, I mean, over the, next 6 or 9 months, Mike, I'm cautious to slightly negative. But I think after that, once we just get to the end of these Fed hikes, that's going to be the time when you want to really get into gold and get into the gold stocks big, because they're really going to take off after that.
Oh, it'll be a fascinating time. If you look back to that cycle of 99 to 2001, really 2002, that's when I first bought a gold stock, was in 2002 in the first quarter. And at the time, the $300 level had been resistance for years. And I was one of the, very few, I felt like a pioneer buying this stuff, because at the time, gold people were really non-existent. And they were all bearish and beaten up over the years. So it feels very similar to me in that manner too.
Yeah, and I think what will be interesting, Mike, because I'm looking at when gold has had its best moves, how much has it rallied? And I think what you'll see, like when a real bull market starts, you talk about the $300 level. Well, that level now is probably $1,375. And so even if gold were to go below 1,200, and we have this long, gold is making this long saucer bottom pattern, and it's building up a lot of energy. And even if gold breaks below 1,200, there's really strong monthly support around 1120, 1125. Even if gold were to test that at some point, when a real bull market starts, I mean, gold is it's gonna rebound back to 1375, literally in 2 or 3 months. It's gonna happen quickly. Then it's gonna consolidate for a couple months. Then it's gonna shoot up after that. So it's what I'm pointing out is when gold actually moves into a real bull market, it's going to move quickly. I mean, the sentiment can shift literally in a month or two, and that $300 level that you were talking about, I mean, the equivalent to that this time around, I think, will be that 1375 level. And so even if gold were to trade lower and lose 1,200, it's still not that far away from that resistance. And once the Fed stops hiking and the fundamentals really turn bullish for gold, I mean, it's going to fly. It's going to fly right through that resistance and keep going after that. I mean, that's what happens in a real gold bull market. I mean, we have not had that in the last couple of years. I mean, we had a really strong rebound over 6 or 7 months in 2016, but gold just couldn't sustain it. I don't see that happening when we move into next year in 2020. I see very, very positive things for gold. And so maybe people should be a little bit defensive here, maybe raise a little bit of cash, just be patient, research the stocks that you think have really strong potential, and and then at some point when they become really good values, you want to pounce on those. But here and now, I don't see gold breaking out in the next couple months or this year. I mean, I hope I'm wrong, but the corollary to that is I do see gold starting a real fantastic bull market sometime next year.
Right. Well, I just look a few months out, so the market's so crazy, the stock market, in my view. I know anyway, that's a whole nother topic. But thank you for taking the time to talk with me. Before you go, though, could you tell people where to go to get more information from you.
Yes, thank you, Mike. You can go to thedailygold.com. You can opt in there at the top and get a report on one of my favorite juniors. Well, my favorite junior, actually. And that will subscribe you to my free newsletter. I send out an update for the free newsletter every week, and maybe you can read that for a few weeks before you consider subscribing, and that'll tell you if you think my work is worth your money or not.
Well, I think it definitely is, and that's why I'm talking with you, to get your perspectives on what is going on. We'll keep in touch, and hopefully it won't take us long before we do another interview.
Absolutely, Mike. Thanks so much for having me. It's great to talk to you.